Hello, we're going to do an example like your homework. These are the 10 things that your homework asks you to solve for. You'll notice that some of them are totals or subtotals of the beautiful financial statements, the balance sheet, the income statement, and the statement of retained earnings. In addition, there's some terminology that we're looking for, like net realizable value of accounts receivable or net book value of property, plant, and equipment. This example is based on the following information, and we're going to sort this alphabetized list of accounts by type. You'll recall there's 4 kinds of assets: current assets, investments or long-term investments, property, plant, and equipment, intangible assets. 2 kinds of liabilities: current liability and long-term liability. And 2 types of shareholders' equity: contributed capital and retained earnings. And on the income statement, there's revenue accounts and expense accounts. Our first one is accounts payable. Accounts payable is a current liability, so I'll put the 64 under CL for current liability. Accounts receivable is a current asset, so I'm going to put 190 under CA. Accumulated depreciation is a contra property, plant, and equipment, so I'm going to put it in brackets under PP&E. Accrued expenses payable, well, payable rules here, and that's a current liability for 100. Allowance for bad debts, also known as allowance for doubtful accounts or uncollectible accounts, is the estimate of what we're not thinking we're going to collect from the accounts receivable. So the difference between accounts receivable and the allowance is known as its book value or net realizable value of the accounts receivable. And that's the first thing that we're asked for, is that 180. So it's the accounts receivable of 190 less the balance in the allowance account, which is a contra accounts receivable account. Amortization expense is an expense, so we'll put it in expense. Bad debt expense is an expense, so we put it there. Cash equivalents is a current asset of 103. Common stock is contributed capital, so we'll put that there. Cost of sales is an expense, sometimes known as cost of goods sold. 782 is an expense. Depreciation expense, an expense. Dividends declared. You'll recall that one of the statements that we do is the statement of retained earnings. And we know that that begins with beginning retained earnings plus the net income that we're going to find on the income statement minus the dividends or the dividends declared will give us ending retained earnings. So that's kind of how we're going to get that retained earnings number. So dividends declared or dividends will subtract from beginning retained earnings added to net income. Dividends payable is a current liability of 8. Goodwill is an intangible asset of 187. Income tax expense is an expense of 130. Income taxes payable is a current liability of 120. Interest expense is an expense of 94. Inventories is a current asset, 329. Investment in short-term securities, since these are short-term securities and not long-term securities, it's a current asset of 75. Long-term note payable, 649, is a long-term liability. Long-term investments is an investment that we're going to hold for longer than a year. Other current assets are current assets. Other current liabilities are current liabilities. Other intangible assets are intangible. Other long-term liabilities we don't know, so I'm going to put it in a box so I know I have to find it. Other operating expenses is an expense of 23. Other revenues is 26, so revenue is 26. Paid in capital is a contributed capital account of 12. Prepaid expenses is a prepaid, so 44 is a current asset. Property, plant, and equipment, 395, is the cost of our long-lived assets that we use in our business. Beginning retained earnings, January 1, is 148. Salaries expense is an expense of 202. Sales is a revenue account of 1,500. And sales returns and allowances are the sales that we made, but the customers returned the goods to us, and so they're sales returns or a contra revenue account. Supplies is an asset of 8. Supplies expense is an expense of 9. And unearned revenue is a current liability of 100. So what we're going to do now is to find the totals. So as we can see, we can take that net realizable value of the accounts receivable, 180, plus the other current assets, and find that our total current assets come to 750. Our total investments come to 400. Our net realizable value, or our book value, of our property, plant, and equipment is 270, since we subtract accumulated depreciation from the cost of the property, plant, and equipment. And finally, intangible assets are 187 plus 18, or 205. So my total assets comes to a total of 1625. And when I get done with liabilities and shareholders' equity, it's also going to come to 1625. So let's see, current liabilities, I can find that number, it's 552. I can't find long-term liabilities yet, but I can find contributed capital is 72. And in order to do retained earnings, remember I must find the income statement. So the income statement revenue comes to 1510, and expenses come to 1310. So the difference between 1510 revenue and expenses of 1310 is we have a net income of the difference, or $200. And that net income, or difference, gets closed into retained earnings. So beginning retained earnings of 148 plus our net income or profits of 200 minus the profits we paid out to our shareholders of 20 will give us ending retained earnings. And ending retained earnings is 328. So if total liabilities plus shareholders' equity is 1625 and total retained earnings is 328 and contributed capital is 72 and current liabilities are 552, if I subtract those three, current liabilities, contributed capital, and ending retained earnings, from the total liabilities plus shareholders' equity, I can find that ending long-term liabilities is 673. And if it's 673 and long-term liabilities, debt, was 649, the other long-term liabilities must be 24. So we have all of our numbers now to fill in the solution. So net realizable value, remember, was the accounts receivable minus the allowance of 10. So the net realizable value is 180. Total current assets totaled to 750. Net book value was the cost of the assets of property, plant, and equipment, $395, minus accumulated depreciation of $125, gives us the net value of $270. Total assets, totaling up the four types, was $1625. Current liabilities, totaling those up, came to $552. Total liabilities we derived by taking the $1625 and subtracting total shareholders' equity, which is $400, which was the $72 of contributed capital plus the retained earnings of $328. So the difference between $1625 and $400 means total liabilities were $1225. And we know that the $1225 was made up of current liabilities of $552 plus long-term liabilities that we backed into of $673 to give us that. Net income is revenue of $1510 minus the total expenses of $1310, or net income was $200. Retained earnings, you'll recall, started with beginning retained earnings of $148, to which we added the net income of $200, subtracted the dividends we paid out to shareholders of $20 to come up with ending retained earnings, and ending retained earnings was $328. Other long-term liabilities, through the process of elimination, we determined was 24. Because we took the long-term liabilities, I could take the total liabilities of $1225 minus current liabilities of $552 to come up with long-term liabilities of $673 and subtract out the long-term notes payable of $649 and back into 24. So I hope this has been helpful in figuring out how to approach and solve your homework.